Good afternoon, ladies and gentlemen, and it's a pleasure to welcome you to this panel, Charging Ahead, Grid-Scale Market Models for Advancing Long-Duration Energy Storage Solutions. Over the last decade, lithium-ion batteries have transformed power systems, scaling rapidly and solving many short-duration balancing challenges. As renewable penetration rises, however, the problem shifts. Volatility extends beyond the traditional minutes and hours into days, weeks, and sometimes seasons, and the grid needs different solutions. Lithium-ion is already stretching into longer durations, with projects moving from the traditional 1 to 4 hours into 6 and 8 hours. We have seen a few RFPs around the world, around 6 to 8 hours, as well as round-the-clock PV plus storage projects like in the UAE and in India. Unlocking the next phase will depend not just on technology, but on policies, market designs, and remuneration frameworks that reward duration, reliability, and system value, not only fast response or short-term arbitrage. My name is Alessandro Zampieri. I'm a partner at BCG. I work on decarbonization solutions, including energy storage. I'm your moderator for today, and I'm joined here on stage by our 4 distinguished speakers. We have on my left, Sharad Mahendra, Joint MD and CEO of JSW Energy. We have Srivatsa Iyer, CEO of Hero Future Energy. We have Jonathan Moran, CEO of Invinity Energy Systems. And finally, Dr. Hitesh Doshi, Chairman and Board MD, Waaree Energies Limited. Without further ado, let's jump into the discussion. I would like to ask the panelists to spend maybe 30 seconds introducing yourself and your organization, and then we can move into the discussions.
Yeah, good afternoon. I'm Sharad Mahendra. I'm representing JSW Energy. Just a quick brief about JSW Energy. We are a diversified power producer, present in hydro, thermal, wind, solar, and now into energy storage also. And we are, you have huge plans of growth. We are presently at about 13.4 gigawatt operational capacity and adding significant capacities year on year to reach 30 gigawatt of generation capacity by 2030 and 40 gigawatt hour of storage capacity, which is a mix of battery energy storage and a large portion from pump storage. Thank you.
I am Sri Iyer, Hero Future Energies. We are an independent power producer with assets in India, Vietnam, Ukraine, and now the UK. We're deploying about a little more than 5 gigawatts of projects right now all over India. 100% of them have battery storage, about 2.5 gigawatt hour. We also have a green hydrogen plant operational in India, and we are starting our first standalone battery storage project in the UK, purely to provide grid services.
Thank you. Good afternoon. My name is Jonathan Maran. I'm Chief Executive of Invinity Energy Systems. We are a technology business. We design and manufacture vanadium flow batteries. We are the world's biggest modular flow battery business. We've got flow batteries in 90 installations around the world. That covers the US, Canada, UK, Europe, and Australia. It's a proven technology, the vanadium flow battery, and I'm sure we'll get into in a few more moments how those characteristics work.
Hi, good afternoon. I'm Hitesh Doshi from Waaree Energies. We manufacture solar panels, cells, now ingot wafers, and in batteries we are doing a packing now, but lithium-ion cells will start in this calendar year, around 20 gigawatt. Apart from that, we are in business of transformers now in transmissions and smart meters, inverters, and others. Thank you.
Awesome. Thank you so much. So before we start talking about policies and market design, which is the core of the discussion today, let's have a brief introduction to the concept of long-duration energy storage systems. Sharad, maybe can you tell us more about what is a long-duration energy storage system and why do we need them?
See, long-duration energy storage is a system which provides, it has a unique advantage in terms of when we are seeing, especially if we see India as a country wherein we are seeing a significant capacity addition in the renewable energy business, and especially dominated by solar capacities. So there is a lot of generation which is happening during the day hours. But off solar hours, suddenly, we have the country needs to ensure the grid stability, where storage plays a very, very important role. And the same grid infrastructure which gets occupied by allocation of the capacity for the solar is operating actually for about 8 to 9 hours only during the solar hours. Then that evacuation capacity is available, but nothing is flowing. So battery energy storage and coupled with pump storage, hydro pump storage, is the thing that the same capacities, especially in case of the solar connectivities, the battery energy storage coupling with solar capacities will enable grid stability and provide the power during the peak hours which is required, which at times country faces shortage also, and the cost also shoots up. So I feel that energy storage is a solution, when Government of India also has announced a huge storage plan of battery energy storage and 100 gigawatt of pump storage capacity going forward in next 5 years.
Fantastic, thank you. Hitesh, a question for you. So what role can lithium-ion play in the long-duration energy storage domain, and when does it find sort of its limitations, its boundaries, and other technologies need to step in to complement?
I think lithium is not made for a long duration storage, but the country like India, where our demands are peak for 2 hours to 4 hours, the lithium ion is the best solution. But the way the technology and the cost structures are moving, I think eventually we will see the lithium will also play a big role in a long duration storage requirements.
Okay, thank you. Jonathan, a question to you. You work on vanadium redox flow. Your company does vanadium redox flow batteries. What role do they play in long duration energy storage, and how can they complement lithium ion or compete with lithium ion in this industry?
Thank you. I think I'd like to say we complement rather than necessarily compete with lithium ion, because I do firmly believe there's a good role for both lithium ion and vanadium flow on the grid. The reason people are interested in our assets is for a number of reasons, one of which is there is no degradation over a 30-year period. So therefore, if you're looking to couple a battery storage asset with the typical life of a renewable asset, you can do so. So if you're financing it, you can there's no need to think about a recycling or a recharge halfway through. We also have no restrictions on cycle time. So therefore, we like our batteries to be cycled as many times as possible. And ideally, you want to find a high throughput case so you can really get the benefit of those assets. It's interesting what you said about cost, because everything comes down to costs. And one of the things we think about is what's held back that development of flow batteries. The technology's been around for about 40, 50 years. And what's happened is that a lot of the investment in batteries has gone into lithium because of the growth in mobile phones and laptops and EVs. And now that the vanadium flow battery technology is proven, you're starting to see that investment coming through. So we are able to be dropping that cost so that we can start to compete head on with lithium. And when you do average the cost of ownership over that life cycle of the asset, then on a levelized cost of storage, as we talk about it, we tend to find we're very competitive.
And so which duration range are we talking about here?
The definition of long duration changes. The Long Duration Storage Council talks about 8 hours. In the UK, there's a fantastic program to support long duration storage. It's 8 hours plus. And actually, if you're looking to get better penetration of renewables onto the grid, then 8 hours actually allows that time shifting and that storing of power. It's a big issue in the UK. It's interesting, a flow battery can cycle unlimited time. So of course, actually there are applications where you shorten the length of the battery, but you find potentially a data center that needs regular cycling. You can actually make use of a flow battery and potentially use it on 4 cycles a day. Suddenly your cost of cycles across 30 years is very, very low.
Awesome. Thank you. So let's switch gear and let's talk about policies and market design. Shri, what changes in grid scale market design are critical to create bankability for lithium-ion projects?
So the main thing is revenue certainty, right? When we go to the markets to raise debt and to a certain degree equity as well, they look for some degree of certainty in terms of the revenues over a period of 20 or 25 years. That being said, I think India has done a really good job over the last 2 years, because a lot of the tenders being floated inherently incorporate battery systems in them, and they are 25-year PPAs. So you've got tenders like round the clock that require a combination of solar, wind, battery, what I call firm and dispatchable renewable energy, which is actually a load following hourly for the full year. All of those actually have a battery component, and they are signed as 25-year PPAs. So I think in that sense, the revenue certainty already exists. The second tranche of things that from a market perspective is happening in India is the capacity market. And over the last 18 months, you've seen lots of tenders on capacity markets for batteries floated either by different states or by the central government, and where all they do is provide capacity at a certain location. So in these two, I think a lot of progress has been made. I think where we continue to expect, I guess, more progress, as we see renewables today is, let's call it, less than 20% of the actual energy flow into the system. As that goes into the mid 40s and 50s, ancillary services are going to be absolutely essential. It's not just a nice to have, but to maintain grid stability, we absolutely need ancillary services, which means we need a market construct that values ancillary services. And I think that's what we'd be looking for next, which is what type of market structures could be created that allows private investors to go in and participate in ancillary services, right? In addition to the capacity market. And perhaps the way one could think about it is the way we are participating in Europe. For example, it's really multiple revenue streams. The first one is just really intraday and interday arbitrage. The second one is the capacity market. Third is ancillary services, right? And so you've got to actually pack one on top of the other. The market arbitrage is something we'd really expect the market to support a little more, because today there's an artificial cap of 10 rupees at peak hour tariff. You would really, I think, to incentivize investment, you're going to have to remove those and let the market do what it needs to do, right? And the one additional market design structure that could really be implemented in India is time of day tariff. Today, there's no demand modification in India because it's a flat tariff for 24 hours. So even though peak hour tariffs on the exchange could be 20 rupees, as a consumer, you pay the same tariff. So there needs to be a market signal even to the consumer saying, don't consume that much during the peak hour because your tariff is going to be different. So that's the other market signal we really hope gets introduced in India. And lastly, this is more of a personal comment, has nothing, I think, just observation of the market. The capacity market over the last 12 months has been participated by players who, for lack of a better word, are not fully knowledgeable about the renewable energy market or batteries or technology or anything. And they're bidding numbers to such ridiculously low levels that these projects may never get built or they're not financially viable. And so what we really would like is, while the ERA is good for mature markets, for emerging markets, there has to be a different market mechanism than ERA, because ERA really incentivizes the worst producers to win. And the worst players are the ones who most actively participate. So I'm not sure what the solution is, but I don't think ERA is the solution there.
Got it. Sri, you already talked about revenue certainty as an important mechanism to create projects bankability. So I would like to switch to you, Jonathan. The UK is putting in place a cap and floor mechanism that is supposed to facilitate the deployment of up to roughly 8 gigawatts of storage capacity with 8 hours of duration, right? So can you tell us more about how this works, what it is, how it works, and maybe also provide some indications on how other countries could deploy similar revenue certainty mechanisms?
Yes, absolutely. So the UK has a fantastic wind resource. You know, we've got actually some of the most deployed offshore wind in terms of absolute gigawatts around the world. But actually, we've got the highest power price of anywhere in the G7, in fact, most of the Western world. And the reason being is that natural gas sets our price, I think, 97% of the time from a gas peaking plant. So it's actually had no impact whatsoever on consumer or retail or other power prices. And at the same time, we're actually curtailing a lot of that wind and spending billions paying in curtail wind payments. So, and we've got a grid that needs investment and significant investment. And so what the UK government has done is, or is in the process of doing, is putting in place a support package to try and get long duration storage across the country onto the grid. And so they set up a program about six months ago that said that if you were either lithium or pumped hydro, then you had to bid with a project that was 100 megawatts minimum, 8 hours duration. If there was a novel technology, you had to bid with one that was 50 megawatts, and again, 8 hours. And that technology had to be at that capacity after 25 years, so no good degradation over 25 years, and be available as needed. And I think it's about 177 projects bid into that. Now, the reason being is what the government is doing is providing a floor on returns. So it's basically guaranteeing debt for projects at a level that they think is bankable. And that's why suddenly project developers are saying, actually, yes, I will put an 8-hour battery on there, but I don't have to concern myself with wondering what that merchant trading revenue is over that 8-hour stack, because the data doesn't quite support it yet. But we know as a country, if we can get that 8 hours of storage on, then we can time shift the renewables and increase our penetration from 50 to 70, 80%. We are lucky enough to be 21 of the 77 projects still working their way through that, and we've got 17 gigawatt hours of projects working their way through. So as a novel technology to have the likes of Centrica, one of the biggest utilities in the UK, Frontier Parex, National Gas, looking to support those projects with our technology. That's a huge endorsement for not just us as a business, but for vanadium flow batteries in general. It's interesting what you said about ancillary revenues, and just a word on that. What we saw in the UK initially was half-hour, 1-hour lithium batteries come onto the grid, really providing those ancillary services. And what happened, and I think other countries need to try and avoid, is the saturation of those batteries trended those revenues to practically zero. So whereas what you used to have was 70, 80% coming from ancillary revenues, 20 or 30% from merchant trading, they've disappeared because the marginal cost of doing that is negligible, and it's left a whole bunch of stranded assets and a whole load of investors with assets they don't need and damaged the market, and it's taken 2 or 3 years to work through that. So a word of warning: if you're going to put that mechanism in place, make sure it provides some level of support, but you don't just have the market take that out. But otherwise, for long duration storage, if you can get the technology and the use case bankable, then the technology and the developers will follow.
Awesome, thank you. So Hitesh, Sharad, in this order, maybe as manufacturers and project developers, how do you think about risk allocation in long duration energy storage projects? So what risk must be absorbed by governments and policymakers or utilities versus the technology and especially the project developers? Can you tell us more?
First of all, as we all of know, that the market is there, government intentions are there. We are seeing a huge number of the tenders. The challenge, like Sri has mentioned, the challenge is whether the way the bids are coming and companies are giving the bids, will these projects will get the build. So in my opinion, this needs to be changed, because we have the now surplus power in the afternoon, we don't have the power in the peak hours. So there is a demand, there is an intention, everything is in place. Unfortunately, the projects will build or not, and that mechanism, in my opinion, the first thing is to be changed. Second thing, I think the country like India, where we have another large challenge of the grid connections. So huge number of, I will say 80, practically it is on the website, we call 136 gigawatt of the solar. This grid is not utilized. So if the new kind of the tender comes, where we may get the little bit serious players and the higher investments, these grids are utilized after the solar hours with the additional solar power plants and backed with the batteries. And the third and last thing I think is that the off-grid, which the Indian government has done in the Kusum, the small projects, if this can be also pushed further along with the batteries, this will be overall helpful on a national level side.
Awesome, thank you, Sharad.
Yeah, to large extent, I agree to all the points what Hitesh ji just said. But I will just like to add one step what he said, that what kind of support from government is required for the industry, for the sector to grow is, of course, that we have seen, and that will continue, that solar capacity, the way it is increasing, and current year is going to see a record increase in a single year, maybe 35 to 40 gigawatt of solar capacity coming in a year, is a huge capacity. We all, maybe most of us must be knowing what California witnessed maybe a few months back or about a year back, and what Portugal witnessed in terms of the grid collapse. And that is where I think government is focusing, and government needs to do a lot with the capacities coming in the grid during the solar hours is huge, and the grid stability is one of the biggest challenge, and grid infrastructure. Of course, we cannot compare, because we are doing now our grid infrastructure. I can proudly say India has one of the strongest grid infrastructure. When I was in US, I've compared in what the grid infrastructure in Europe is. It's an old infrastructure. So these kind of high evacuation lines, high evacuation capacities which are being said, government needs to continue on that. And of course, very well said that, and the government has started also, Hitesh ji, you must be knowing that now the solar capacities which are there, we have started seeing till about a year back, it used to be plain vanilla solar or vanilla wind project bids used to come. Now it's a hybrid. Now hybrid also has gone. It is more of a FDRE, what Shri also said just now, so that the grid utilization is maximum. It's a national asset. It needs to be utilized fully. With the utilization has been, when we say thermal plus RE capacity, which is about 17-18% of the total generation capacity in India is RE, which is increasing every year. I think grid capacity utilization is key, where storage is going to play a key role, and where we have also started in country also, like the solar capacities which are there. Now you can set up additional solar near to the evacuation center, charge the batteries during the solar hours, and during the evening peaks, you can utilize the same connectivity which you have in allocating and discharging the power during the evening peaks. Apart from that, we are talking about the battery energy storage, but here, I would like to also intervene that India has a unique advantage of solar radiation, wind also in 7-8 geographies extremely good, and explode very less, but pump storage is a huge capacity. And in fact, the government of India, Prime Minister himself has announced, we all know, I think Surya Uday or some kind of thing, which is from Arunachal Pradesh. This side, there is a huge potential across the country, even within these states of Maharashtra and many others, that pump storage is going to play a very, very key role. That is the reason Government of India has announced 100 gigawatt of pump storage capacity, which is a large duration energy storage of 100 gigawatt, and if we say average 6 to 8 hours, so it's a huge capacity which is going to be there in next 5 to 6 years, what we see, and government is very active. So I feel that a combination, both battery energy storage and pump storage, both will coexist. The needs are different. I rightly say 4 hours, beyond 4 hours if we go, the economics right now in India, maybe you said about UK, it's fine, because what are the unit costs in UK? Compared to that, longer duration battery energy storage is a viable solution. But the average unit cost, kilowatt hour cost, which is there in India, maybe beyond 4 hours, the economics don't work, and the buyers, the discoms, the states will not be very keen to buy power at that cost. So we feel that right now the best solution is up to 4 hours of battery energy storage, and longer duration pump storage up to 8 hours is the ideal solution with the RE capacity addition which India is doing.
Okay. Maybe just breaking the flow for a second, Jonathan, where does then a solution like vanadium redox flow come in, complementing? So we talk about complementing lithium ion, but maybe in between lithium ion and pump hydro.
It's a very good question. It comes back to where a vanadium battery tends to win out. It tends to win out in an area where you're going to cycle it more than once a day. A purely grid-connected asset that is trading for 2, 3, 4 hours. At the moment, vanadium flow batteries will, from a pure capex basis up front, struggle to compete. We are driving that cost down. We are looking to set up our manufacturing within India as well, to have a Indian-produced supply chain and product that is enabling us to drive cost out. So in the not too distant future, I'd like to think actually we can start to compete against lithium at that 4-hour duration. But looking outside of that, there are plenty of other applications we see where a vanadium flow battery can sit. So potentially in a green hydrogen project, we're looking at one in the US at the moment, which would be an entirely off-grid green hydrogen solution. California is looking at zero carbon from their emissions, not net zero, it's zero. They are converting one of their gas-fired power stations to run on hydrogen, and they need a green hydrogen solution that has pure green. It was made with pure green electrons. We are looking to put a 400 megawatt flow battery next to a solar-powered green hydrogen project, such that can generate hydrogen during the daytime and then keep that system sort of on idle overnight to making sure it can fire straight up again. You don't get any degradation and efficiencies there. So that's one good area. There is, if you look at a project in Switzerland on the Swiss grid border with Germany, it's in Laufenburg. They are looking to build a 1.5 to 2 gigawatt hour flow battery, vanadium flow battery beneath a data center. Now, they're looking to build 25 meters down over 3 acres. It's an enormous project, and you'd initially look at that and think that will never happen until you realise they've been in the ground for 9 months and they're already 25 meters down. That's a 2-hour battery. So that's interesting. That's not a long duration battery. A vanadium battery can do that because it can cycle, And if you look at the use case across a battery, across a data center, that's an application. So at the moment, it's cherry picking those applications, which makes sense.
Thank you, Jonathan. Back to you, Srivatsa. So how must grid planning and dispatch models evolve to actually fully recognize and value the flexibility that long-duration energy storage systems can provide to the grid?
I guess a couple of comments. One, first, I agree with Sharad when he said, look, we have a really, really good central grid system that on the solar side, primarily, and on the wind side is utilized only 30% of the time. Now, imagine going to an investor community and saying, I'm going to invest $10 billion and I'll use it only 8 hours a day, right? We'd get thrown out of every boardroom, right? But unfortunately, that's kind of what's happening today. And so the whole notion of how do I utilize it the other 16 hours is now gaining steam, which is set up new projects at the same location, use the same connectivity and use the grid or maximize the utilization of the grid, at least to, let's call it 90, 95. But a comment on India, renewable energy, which is, given its geographical location, different from, I'd say, the northern part of North America and Europe, which is, we don't have large seasonal variations in renewable energy. In other words, solar is more or less in a fixed band 365 days of the year. Now, clearly monsoon season, it decreases a little and so on. But unlike North America or northern part of North America and Western Europe, where winters basically is completely different from summers, that doesn't exist in India. So we have the benefit of having close to round the year or very little seasonal variability in solar. Wind, we do have what we call high wind, low wind season. But again, the contrast is not 100 and 0, right? It's high wind is high and low wind, we still get wind. It's just a little less, right? So from a forecasting standpoint, I think that is the real challenge in India. How do you have micro level forecasting by hour of day, by region, right? Because in the way the grid manages itself, it has to manage itself based on a scheduling and forecasting and then a dispatching. Renewable energy by its very nature is quite volatile. So do we have a system where we can actually forecast demand by region in the country? And I believe the answer is the FDRE tenders have shown that they're at least attempting to do so. So on the demand side, that's happening. I think what's really needed is a system-wide look as to can I then take the sum of all of those in the different parts, at least by RLDC and SLDC, and say, what does that intraday or hourly demand for a year look like? And similarly, what does the hourly supply look like? Right? And then how do I manage the most optimized way to meet demand with supply? In other words, where to dispatch, who dispatches, and then use the storage according to both the grid constraints as well as where the real mismatch between supply and demand on an hourly basis could be. Today, it's a little, I'm going to use the word, let's run and do it. So every state has their own battery that they're adding for capacity, rather than a system approach to say, where are the best locations in the grid based on hourly variability of supply and demand to actually add the battery? Where are the best places to actually give them a capacity and have ancillary services rather than everybody do it independently? One consequence of this, what I call independent approach, is there's something called a deviation settlement mechanism in India, where they say you have to forecast by hour for the next 24 hours how much you're going to put, and if you're between -5 and +5, you pay no penalty. If you're between 5 and 10, you pay a silly penalty. And if you're 10 to 15, penalty is even higher. Unfortunately, every producer then has to independently do their own forecasting rather than take a system approach and then have a battery that says that battery will make up for the mismatch between a global forecast schedule and the actual, and then distribute those costs to all the producers who come, right? So I'm thinking more of an system optimized way of managing the grid rather than the way it's done today, which is very, I'd say, localized and leads to suboptimal costs that the system in the end has to bear. Because I'll guarantee this, and Shraddha will tell you this, we book those costs when we bid for projects. So it's a real cost. Somebody is paying that tariff. Nothing comes for free. So how do you reduce the total system cost by having a more optimized view of dispatch across the country and then coordinate all the RLDCs together? I think might lead to a better outcome for the grid overall.
Awesome. Thank you, Sri. Maybe let's start with Hitesh, but the question for all the panelists now, moving on to India, and we already touched upon the topic a little bit over the last 20 minutes, but what are the unique opportunities and challenges when it comes to long duration energy storage deployment in India? Can you tell us more? Let's start with Hitesh.
I think challenges are definitely execution of the project. Like we talk about the pump storage, the time it takes to build and execute. The another challenge is the investment into the new technologies, because entire the market is a price driven today here. Somebody wants to do any new technology. We talk about SAD or flywheel or many other things. The issue is who will invest for that and who will pay for that. So market is there, so that's not a challenge, and intention is also there. So these both the things are in place. At the same time, the focus is more now to meet a peak power demand. So there is a less focus, in my opinion, on a long duration.
Thank you. I'm gonna go this way, Jonathan.
I think I would agree. The challenge is always financing. If the financing is available, then the projects will follow, and we've seen that throughout the world. You know, say we're in the US, Canada, UK, Europe. The financing is typically what gets in the way. For us, it's cost, certainly for the new technologies coming through, and a mechanism in place to allow those technologies to develop, and particularly if they have longer life cycles as well, so sort of provide that benefit. But I think there's huge opportunities. I look at the India market, and I'm certainly not nearly as familiar with it as my colleagues here. But there are some great opportunities, some huge opportunities to improve the quality of what's on the grid, improve the penetration of renewables and the resilience that's on there. Certainly, from our perspective, I see a great opportunity against wind. You know, a lithium battery against a wind asset has challenges. You know, actually, if you can start to really store that great wind asset that India has, then you're going to get some increased wind penetration.
So there was an interesting study by McKinsey that said 75% of India that will exist in 2047 has not even been built yet. In other words, that's the growth we can expect over the next 22 years. So I think as a country, India has an opportunity to do it right the first time, right? Unlike, I'd say, more mature economies, OECD economies that have built an entire infrastructure based on old technology, we can leapfrog, right? So how do we do it right the first time? Now, if you were to bid out a new thermal power plant, now Sharad's an expert, I'm not, I'm going to say roughly cost to recover capital is probably 6 rupees a unit roughly you may need. And plus you always run the risk because it is a high variable cost business, and you have to project coal prices for the next 20 years, and who knows what that's going to be. According to RMI, and I tend to agree with them, a combination of wind, solar, and storage, and I'm not going to say what type of storage, all of the above, can provide dispatchable energy within the next few years, right? The technology is evolving so rapidly. So how do we as a country, that's the biggest opportunity I see, is build baseload dispatchable capacity on renewable energy plus storage, and start rethinking this automatic, oh, you can't do it without thermal, oh, you need thermal. Probably you need thermal for a while, but the question is existing thermal good enough going forward, or do you need to continue to build new thermal, right? That's the critical investment decision. I don't know what the answer is, but time will tell. Technologies are improving, costs are falling. Who would have thought battery costs would drop by 80% in 18 months? I don't think any of us projected that, right? New technologies, new costs. How do you build a system with a grid management, as I said, smart grid management that takes renewable energy plus storage, which almost certainly I would think today has to be some long duration storage like pumped hydro or newer technologies, plus short duration storage, to then develop a fully dispatchable energy system. And I think we have the opportunity to get it right the first time.
Yeah, I think most of the points are covered, but I will just like to add a few things. One, of course, when we see what is actually required for this combination of energy storage coupled with wind, solar, as she some time back said, FDRE, which is a firm dispatchable renewable energy based on the hourly consumption pattern. What has happened is the tariffs being discovered have to be right for the investors, because it is a 3:1 debt equity. You have to ensure the cash flows for 25 years. What is happening here is that if we compare each state, each buyer, each DISCOM has a different pattern. If I compare some states which are manufacturing dominated, like the state of Maharashtra or Tamil Nadu, and I compare with maybe Bihar or a Jharkhand, which is agriculture dominated economy, the hourly patterns are very, very different. And each project in itself, each supplies in a project which is to be designed, customized, which include that the storage will be high, what is the wind component, what is the solar component, all those things. But what is happening here is that a lowest tariff which is getting discovered, maybe less wind, more certainty, solar dominated plus storage coupled with a small wind portion for a state like Bihar, agriculture dominated economy, and then being compared with the states which have a very different usage pattern. 24 hours they need, manufacturings are going on, power is required. So there, ensure post solar hours, wind capacity has to go up, storage has to go up, the tariff investment goes up. To maintain the benchmark returns, the tariff goes up. But that is what somehow there is a vicious circle which is going on. That was the lowest. Everyone is thinking that I should get, not knowing that what they are buying. So basically comparing a normal Toyota with a Mercedes and buying at a Toyota, asking for it at a Toyota price. So that is one. Apart from that, I agree that the way Indian economy is growing, this is the fastest growing economy of this size in the world. And any economy which has to grow, we have seen what China has seen demonstrated in 30 years. India has started that journey which China started 30 years back. And the economic growth of 7% year on year, the kind of energy which is required, the reliable energy which is required, of course, this green energy is going to play a role, but as Government of India has announced, energy security and sustainability both. To be energy secured by 2047, wherein reliable power is required, it will be a combination, of course. Many may not like, but for fossil coal-based thermal plants are going to play a very important role, at least for next 10 years. And coupled with the green energy, lot of organizations, data centers, AI centers which are coming have a mandate of green power, wherein storage along with wind, solar is going to play a key role. This is how I see. Beyond 10 years, maybe the nuclear is something which India has started the journey now. We will see a big capacity additions when private sector entry in the nuclear space, which is going to provide a reliable power in place of fossil power, maybe 10 years or 15 years from now. That is my take.
Thank you, Sharad. So we are at the last couple of minutes. Maybe if there is one concept that you would like the audience to walk away from this session today with, in one sentence or one word, what would it be? We can start again from Hitesh.
You're asking the manufacturer, and his always wish is that every home or any place where there is a electricity consumption, it must have the batteries backup there. That can be our wish as a manufacturer.
Jonathan?
Only, I guess, something which we've seen across the world to make sure that India does, potentially as it's done on the solar sector, to make sure that domestic content is something that comes to the forefront of any investment decision. The UK hasn't quite got that right. Other countries have, and actually, you can localize manufacture of all of the batteries necessarily. We're doing it. The lithium guys are doing it. You can see it across the wind space as well. Make sure that India benefits from that.
Awesome. Shri?
I'd say renewable energy is the only form of energy that does not necessarily have economies of scale, that can be done at extremely small scale, and is the quickest form of new generation compared to anything else. So I really wish India would start thinking about distributed generation with storage as a complement to what we're doing on a large utility scale to provide support to the grid.
Awesome. Sharad?
Yeah, I will just like to one thing before I say what I think, that India is the economy, and I can proudly say that proud to be Indian and proud to be in India. That is what I see. Next 20 years is India time, and that is where energy is going to play a key role in all aspects. And storage is a must, not just a choice. Without storage, long duration energy storage, the things what country is looking for towards transition, like Government of India has announced 500 gigawatt of renewable capacity by 2030, that may not be sufficient without storage. So storage is going to play a very, very important and key role in making that happen.
Fantastic. Thank you for your closing. we are at time. I would like to thank the audience for your participation today. And most importantly, I would like to thank our panelists for their preparation, their time, and their open discussions today on stage. Thank you so much. Please join me in a round of applause for them.